Hello and welcome back to another series of financial planning. This is Dario Kerkez with IHT Wealth Management. In this topic, we're going to be covering the cash flow statement, the most important financial statement you can probably have. In this income flow graph, we can clearly see in orange the salary bonus for Kevin. We can see a smaller investment income, and we can see a smaller salary on Christine. And as a retirement income, we can see both of their Social Security. And we can analyze this through the ages as they grow older and see can we accomplish any better, particularly in Social Security, in which we'll have a separate video in case we have a larger Social Security of one spouse, lesser than the other one. So is there any spousal benefit? Is there any survivorship benefit, etc.? Let's have a look at the expense table. So let's have a look at the expenses table and see the how Kevin and Christine are spending money and where actually the expenses are going. So we can see the living expenses. Current living expenses are $62,000 for them. We have and we can increase those living expenses by inflation, let's say 2 or 3%. If food is increasing, the gas is increasing, the living expenses are increasing in general. Then we have a liability payments, and then we can see when their home is going to be paid off. Looks like in this case it's going to be paid off in about 4.5 years. And when Kevin is 67 and Christine 67, there'll be no more any liability payments. We can see if there's any other expenses flows, and also we can see is there any insurance premiums like the life insurance, disability, long-term care, property casualty insurances, and also we can see how much in taxes they're paying. In their case, looks like their total taxes is $64,000, and then we can see how the taxes are doing. It looks like they're going to be dropping tremendously from $66,000 to $11,000 when Kevin hits retirement. We're going to have a separate video on income tax planning and why is the Social Security analysis and other assets analysis very important, so we can reduce the impact of the income taxes. And then we can see the total expenses. Once we net the two, then we can actually go and back see the net cash flow. Let's go back right in it. So we are back in the net cash flow, and the net cash flow column actually shows in which particular year they're negative and in which particular year they're positive. So and after that we can see how the portfolio assets are doing. In their initial case, their total portfolio assets is $1.4 million. And are we seeing the decrease or increase? So even though with negative net cash flows, even with the required minimum distributions, even with paying off the liabilities, even with paying off the and withdrawing money from the required minimum distribution, we can see that actually their portfolio total assets, utilizing some moderate assumptions or assumptions that the clients actually agrees with, that are sensible and fairly moderate and acceptable, is actually the total portfolio assets are increasing. So when Kevin is 85 and Christine 75, we can see that their total portfolio assets are $4.2 million. We can actually see that not only they can enjoy their life, but also they're spending the money. They're fine with covering any expenses. There's also going to be a legacy planning or estate planning that we have to do for the children as well. So I hope this helps. And in this case, looks like they will not deplete their savings. They will not deplete their assets. They will not deplete their retirement accounts. They will pass on the money over to the beneficiaries, and they feel good. If you need any help planning for a cash flow statement for yourself or for your family, please send us an email or schedule up a complimentary financial review. We'll be happy to help you out. Thank you for watching, and have a great day. Bye-bye.